All right, why don't we get started? So, welcome everyone. My name is CJ Flaherty. I'm the founder of Loyola Media Group, an MCA Leads company that was started in 2016. I'm also the owner of the High Ticket Closes chat, which is one of the larger MCA chats on WhatsApp. And today, I'm really grateful to have Sean Murray with us. Sean is, I think, someone that probably needs no introduction in merchant cash advance. He's the founder of DeBanked, Broker Fair, Daily Funder, all things merchant cash advance. So I want to welcome you today, Sean.
Thank you, CJ. Appreciate it. And shout out to your company, Loyola Media Group, and to your WhatsApp chat.
Thank you so much. I appreciate that. So I think we have a lot to talk about today. There's a lot happening in the industry. And I guess I probably just wanted to talk about with what's happening over at CMAD. A lot of people have seen that news. It shows up a lot in my chat. I've seen a lot of it on Instagram. From up close, it just looks like a $500 million bankruptcy. But a lot of people don't know how it's affected the merchant cash advance industry. And I'm not sure what the exact numbers are. I've heard 42, 45 funders. I've heard 100 million, 200 million. And I just wanted to ask you, what you're hearing about it, what your thoughts are. Certainly the funders that are hurt in this situation, some may go out of business, some may really be pulling back. And maybe we've got a lot of other funders in the industry that are looking at this and say, hey, this is going to be the way, or maybe a different way I'll be doing things in the business.
For sure. Every few years we have some sort of gigantic blow up that becomes news in the industry, and the dollar amounts are large. I feel like the last time there was one of this nature, it was a car dealership out in California, maybe multiple locations, and the size and scale of this one is a lot larger. So yeah, everyone's talking about it in the chat rooms, even on the Daily Funder forum. I've seen it mentioned on LinkedIn. Over at DeBanked, I haven't written any articles on it. I'm not planning to write any stories on it per se, but you threw out a few numbers there. I have been following the case. I have talked to a few people who were part of the deal. You mentioned maybe 40, 42, 45 funders. I think the official number being passed around in the docket is 42, but I want to draw some attention to the fact that I'm not entirely sure that all of those companies they list are MCA. Okay, so we tend to paint MCA with broad strokes. If it's short-term working capital, it kind of just gets labeled MCA. Sometimes, even if it's a term loan, a true term loan, there's no purchase of future receivables at all. It's a loan with an interest rate. And from what I gather, a number of those funders that have been labeled MCA in that case were really term loan lenders.
Mhm.
And some of the companies that typically do MCAs made term loans in this particular instance. So they're not all MCA. Now, you mentioned a few dollar amounts. I've kept my eye on the docket of this case, and on the CMAD entity, the official reported number is 100 million, and on the Damis entity, the other one, the real estate backed one, the official number in the docket currently is $134 million. So if you combine the two, supposedly, allegedly, it's $234 million, of which some are MCAs, some are term loans, right? So there is a mix of that. It's also unclear at this time as to whether or not there's a little bit of overlap between the balances of one and the balances of the other, because there was a lot of cross guaranteeing going on, right? If you do a big loan or you do a big advance, you might cross collateralize your deal with the other entity, and then they both end up reporting that total in their numbers, right? So one could say we owe 5 million, the other one said they owe 5 million, but it's to the same party, and they're both basically putting out there that, hey, we're aware of a $5 million claim or obligation, but it might just really be the same $5 million claim. With that being said, the number that's thrown out there is $234 million, and the amounts individually are certainly large. Just to give you an idea, I'm not going to name any individual company because I sympathize with those who are now
Sure.
having to deal with it personally. I know a few people who are syndicated in this particular deal, who are working to collect, going through the bankruptcy process. I'm sure it's not fun. Um, two companies that are familiar to most people in this industry uh, are supposed to have been owed more than $10 million. So those are very large amounts. Eight companies, including those, are alleged to be owed more than $5 million. 23 funders, including the ones I mentioned, are alleged to be owed more than $1 million. So it's the dollar amounts are very large. Whether or not these amounts can be tolerated relative to the portfolios of these individual companies, I think it is yet to be seen. $1 million for a funder that's doing $1 billion a year, they probably wouldn't even notice it. But if they're a tiny shop, $1 million can be a lot. It's my prediction, because this happens every few years. Whenever this type of situation happens, there's usually at least one or two players that is hurt so bad that they do end up going away. That just seems to be inevitable, right? I don't think that all of the players in there were not prepared for a default. Most of the time, I like to think that most people who are underwriting risk in this industry are aware of the possibility of default, no matter how good the deal looks, and have already factored in, hey, if this deal goes bad, what happens to us, right? And so there will, of course, be one or two that maybe didn't really make the calculation well enough, and this puts them over the edge, and they'll be gone. As to who that might be, I'm not so sure. I don't want to scare anyone and say you should watch out for this company, or this one's going to hurt them bad and be careful. We'll find out over time, who kind of gets shaken out here. But yes, the dollar amounts involved in this particular bankruptcy are large. It's supposedly 42 funders, a mix of MCA and term loan lenders. But then you have to recognize, as I mentioned before, some people were syndicated in this deal. So we talk about 42 companies, and you really kind of grow that out. There's probably more than 100 companies really at the end of the day who are in it, right? A $5 million balance could be a mix of, could be 20 syndicates in that one $5 million deal. So I think a lot of people are affected by it, and I think it remains to be seen what the impact will be. One thing that I think is going to be a shock for some of these players is that there tends to be a 90-day clawback period in the bankruptcy. So some companies are already calculating how much they collected and trying to look at what's outstanding and saying, okay, well, we might get something back, or we might not get anything back from now. But there's the possibility that they're going to have to give some back that they already collected, right? The 90-day clawback period. In fact, on the docket, I've already seen at least one of the restructuring officers has already stated he intends to go and pursue MCA companies or MCA-like loans that they received and try to recover funds that were collected within the 3-month period before the bankruptcy filing. So even if you're like, hey, we got out a day before, just in time, you might get a rude awakening when you get the letter in the mail saying, hey, you actually have to pay all that back, and we'll determine if you get anything else down the line. So that's something to keep in mind in regards to that particular bankruptcy.
Yeah, that's interesting. I brought a new client on last week, and I asked him how his year's gone so far. And he said, well, I know you've read about the CMAD situation. We just broke it on that. We ended up doing really well with it. So it'll be interesting to see if there's some clawback with commissions or other things that are happening. I know that they have filed to sell their first camp, and there's speculation out there that they'll be selling more properties. So I don't know if that's something that down the road is going to help brokers, recoup or funders recoup some of these losses.
One thing I noticed about this particular deal is that it seemed like a lot of people were familiar with the summer camps in general. Personally, they had kids attended, or friends or relatives kid attend the camp, and so they had that sort of emotional a connection with the camp. That kind of relationship can be a little bit dangerous when you're underwriting risk. Not to say that anyone didn't assess the risk properly, but sometimes you can be a little blinded to all the different risk factors when you have an emotional attachment, a connection, or there's even a nostalgia. Maybe you went to the camp, when you were younger or something like that, and that can impact your thinking a little bit. I don't know that any of that happened here. I'm not here to criticize what anyone did. I guess it remains to be seen what happens, but definitely a unique one. The dollar amounts are huge. It's probably the largest industry-related default that I have ever seen since working in the industry.
Yeah, yeah, interesting. Well, I know you'll be reporting more about it. We will too. So as we hear more, so let's talk a little bit today about what's been happening in Texas and Vermont. So when Texas comes out, I think one of the first times I heard about it is when the bank reported it. Then Vermont comes out afterwards. I don't think there's a lot of MCA brokers that are terribly nervous about what's happening in Vermont, but Texas is a big deal. And I guess the question is like, what do you think we're going to see in the future? Are you thinking that we'll see other states fall? I guess Texas has been something that brokers have been able to work around. But if in 6 months it's New York, California, and Florida, how does that affect the industry? And if you and I are talking 18 months from now and there's 25 other states that are doing it, what does that look like? Do you have any feelings on what states might be coming next and what brokers can do to protect themselves?
So I will say, in regards to just state regulation that we've had over the last few years, a lot of them have actually been driven by the industry itself, meaning representatives from our industry have approached state legislators and said, look, we'd like to have some type of framework to work with here in this state rather than have nothing at all. And so when you hear about a regulation in a state, it doesn't always mean a state tried to crack down or restrict or they're going after. It doesn't always start that way. Oftentimes it's actually originated by members of our own industry, trade groups and lobbyists and so forth who start that conversation. And then of course things can get away from you and you get some unfavorable components that you didn't want. But a lot of it is actually started by people in the industry itself. Now, when we get to a state like Texas, that wasn't really how it all came about. What happened there in particular, the story goes, and now this is public now, is that the head of the factoring lobbying association basically had some friends who worked in the legislature in Texas and saw an opportunity to get a law that really benefited factors. And how could they sort of t choke the MCA companies in particular, who they seem to have a real grievance against? What could they do? And they ended up coming up with this law, the restriction on automated debits. This is something that nobody has ever seen in any other state before. It happened in Texas, but it originated from the factoring industry, the traditional factoring industry. So I think the guy's name is Cole Harmonson. He shared the story online. He literally went detail by detail, like, burning the midnight oil. And, I made a call to this guy and we snuck it in at the last minute and, when we got him. So it was really their work. And of course, there were members from this industry that tried to reverse some of the things that were being added, but were unsuccessful in that regard. But that was a factoring industry driven piece of legislation in Texas. They saw it as sort of almost like a Hail Mary play that somehow worked out, that they didn't even think they were going to be able to get it, and they managed to get it. As you mentioned, Vermont followed suit, and it's a small state, so most people are still worried about Texas. And then, what happens if more Texases happen? I will tell you that the head of the factoring lobby has already gone out and said that his next step isn't to try to do it in another state. His next step is to try to do something at the federal level. So, that's a little bit concerning to hear. I asked him on social media. I don't have a personal relationship with him, but I asked him on social media. I said, is there a bill already that's, been drafted that, kind of shows what your plan is at the federal level? And he said there's no bill that's been introduced yet. Doesn't mean they don't have one that they want to submit. But as far as, what happened, will there be states that copy Texas? The Factoring Association are going to try their hand at just going all the way to the top rather than replicate that across all 50 states. So that's kind of the situation with Texas and Vermont.
Yeah, it's interesting. I know there's some new products that are popping up right now to help brokers and merchants facilitate payments. I got a call from a company the other day in New Jersey. They've got a platform that the merchant can come in, pay, I think, 3%, and he can actually facilitate a deal getting done in Texas. And if the funder wants, the funder can contribute to that as well. So there are some solutions that are coming out. I guess what should brokers be doing at this point to prepare themselves for something much bigger in the future?
Well, first, yeah, on Texas still, the law is very specific. It really targets a specific type of MCA, an MCA that relies on automated fixed debits. It doesn't attack split funding MCAs, although I know most people do not like to do them. It doesn't really impact term loans. Look, there's a lot of term loan lenders in this industry that we might just throw around and say, oh, they're an MCA, but they might not actually be. They're actually doing a term loan. And it's my understanding that term loan lenders are not impacted by the legislation. Also, MCAs that are a subsidiary of a bank are exempt from the law. So there's a number of MCA players right now who are actually a subsidiary of a bank in some form or fashion. They have a relationship with the bank. They're exempt from the law. So you can still do even a traditional, what you call, a fixed ACH type style MCA, as long as they meet the parameters for some of the exemptions that are in there. I think brokers should just make sure that they find the right partners in order to do these deals in Texas, because you can still do deals there. It just might not be the one funder or the two funders or the three funders you were talking to. It could be a term loan lender can still do it. It could be a split MCA. It can be an MCA that's a subsidiary of a bank. And then there's also a number of other creative things that are going on to comply with the law. So Texas is not off the grid completely. It's just changed. And brokers just need to make sure that they work with companies that are legally and compliant in a way that still makes it possible. Might be a little bit different. The deal might be structured a little bit different than what they're used to, but it can still be done there. And as far as what else can brokers do, I find that most of them just rely on their funders telling them what they need to change. Like, you need to have a new page of the contract, or you need to say this on the phone. I think brokers should just take what their funders say seriously, make sure that they comply with whatever guidelines are offered. That way, there's no issue down the line where the funder says, hey, everything's been good, but we just talked to legal and we had to terminate you today. And you're like, what do you mean? We've been working good. Everything's been good. Right. And maybe you weren't, you got the guidelines, but you weren't following them. And the funder wasn't saying anything. And you're like, well, if they're not saying anything, then it's fine. And then one day there's a call in-house with legal, and they're like, nope, that broker's gone. Turn them off. And your renewal book is gone in one fell swoop. So if they set some guidelines for compliance, follow them. Because even if they let you get away with not following them in the interim, even for a long while, there could come a day down the line where they say, hey, you're in breach of the contract. Your portfolio is ours. Goodbye. Right? So they can kind of be setting you up in a way for a termination or a failure or breach down the line. So if they say, please adhere to these rules, and they don't police them hard, just adhere to them anyway, just for your own safety.
Yeah, it's a potential massive financial hit for somebody. Yeah, well, I'm assuming there's going to be more states, and I know you'll be talking about it, and I will too. So I guess we'll get on to something that you and I spent a little bit of time about talking together at Broker Fair, and I'm hearing it 10, 20 times a day, is these line of credit bait and switches that are happening in the industry. There's not a day that goes by where a broker will call me up and say, we bought some leads from you. Things are fine. We got a bunch of deals to the finish line, and we lost out to these guys that were promising a line of credit. They talk about, if you pay $50,000, you'll be admitted to a portal. That portal will give you a line of credit, or will establish a brand new LLC for you. And in that LLC, there'll be a big line of credit. So, we've seen people get arrested in the industry. We've seen people go to jail. I know last year there were 8 brokers indicted out of New Jersey for doing an advanced pay scheme. So that, it looks like there's more federal attention in the industry. What do you see happening with some of these line of credit bait and switches? I don't think the people that are doing them are going to stop doing them. The question is, do you see the federal government coming in at some point and making more indictments or arresting people?
So it's my opinion of, when these type of scams get exposed and people get arrested, I don't think that law enforcement is looking at it as like an industry issue, like, oh, this was the small business funders or the MCA industry that did this. I think they really just look at it independently as like a ring of scammers. right? An individual ring of scammers, maybe there were a couple people involved and they go and they just round them up. Um, line of credit scams and advanced fee loan scams have been around for, like hundreds of years, really. So it's kind of a textbook scam. Hey, I'm going to give you a line of credit, but first you have to do this, whether it's pay me money or take some other type of funding, and then you get something else. That type of scam has existed for literally hundreds of years. They go after it very hard in consumer lending. In fact, I would say that law enforcement's primary interest in this industry is in scams like that, because an advanced fee loan scam, or just regular fraud, like I'm going to give you X and then not give it, right? It's just a textbook case of fraud. They can prosecute it easily. A jury would understand it. It's very simple. So they kind of go after that stuff more than a funder getting defrauded, right? I think funders are, they receive fake bank statements, or they get deals where the merchant lied and, there's some type of fraud involved. Law enforcement doesn't, it's harder for them to really feel the sympathy for, a funder getting defrauded. But when it's just a basic, bait and switch, line of credit scam, advanced fee loan scam, that's something that anyone could understand. They could draft up, the indictment or whatever in 1 minute, and just plop in the names and say, here's what they did. So I don't know that they're going to go after it any more hard and on an organized level than they normally would. But those are easy ones to go after. And, once you kind of hit the $1 million threshold of fraud, you're going to end up on their radar one way or another for sure. So I would say, anyone who's engaged in that, if you're like, oh, it's only $1 million or $2 million, we're kind of just doing a little line of credits, bait and switch, no big deal. You're probably going to end up on their radar. And you're the type of person, that's the type of company that's going to get busted, because it's just so easy to bust.
Yeah, it's interesting. I know there's a lot of guys that are doing it. There's a lot of guys that don't think anything of it. I still hear guys say to me all the time, it's an unregulated industry. And I agree with what you said, whether it's a stock market or merchant cash advance, it's not really the industry, it's the fraud that's being committed within the industry. And, I know sometimes it's just not on the radar of law enforcement, and then it is, and then it's a major issue. And $1 million is going to be somewhere between 3 and 6 years in prison on federal sentencing guidelines. So I'm on Daily Funder a lot. I spend a lot of time there, and I see a lot of brokers saying, hey, I lost a deal today, and here's the company that's doing it. And it just seems like all these companies are popping up over and over again. And what I always think about, and going back to my own experience in the stock market, with people losing money or people feeling they were defrauded, if you're a farmer in Nebraska, and you really need that line of credit, and to make your business go, and someone takes 50 grand from you and promises you that line of credit, and maybe it's not your last 50 grand, but that really hurts. Either you or your wife is probably going to go to complain to somebody, and that somebody's probably going to be federal law enforcement. And I just think a lot of these guys that are saying that everybody's doing it are going to find out that everybody might be doing it, but then everybody might be getting arrested at some point.
It's interesting. That phrase of the industry is unregulated, or there's no regulations, or whatever. That's what makes it, that type of false sense of security is what will get you, because a bait and switch, line of credit scam, advanced fee loan scam exists outside of this industry and is already illegal. They've been going after that in the consumer lending world forever. People try to do that with SBA loans and any other type of loan. I'm going to give you this $10 million loan, but first you got to give me 50K. No, that type of stuff is already illegal. That's just fraud is fraud is fraud. An advanced fee loan scheme where you have to pay, upfront, versus just a line of credit, versus just like take a small funding to get a fake big funding. But if you pay upfront for any type of funding, you don't get it. That stuff is already textbook illegal. They'll indict you in 5 seconds the second they know about you. It's just so easy for them. So, and I don't know that the industry is unregulated. We've already kind of touched on state regulations, that exist now. And I think there's already, the FTC already governs business to business fraud. So if you do something to another business, you might think of it as like, well, there's no MCA industry specific law, but there might be already under, FTC rules that says you can't do this. So I would just be careful for anyone who says, I can get away with it. Everyone's doing it. It's unregulated. There are regulations.
I agree. When I was in penny stocks, people would often say, I'm not a registered stockbroker. This is, kind of an unregulated industry. I'm more in media, and they went out and committed crimes. And, a lot of my former peers are just starting to get out of prison from 7, 8, 9 years ago. So it happens. Yeah. So I think it's something that we'll have to keep an eye on. I think it's really something that just continues to plague really good brokers, because these guys have legitimate deals. They're spending a lot of money on leads, spending a lot of money on marketing, trying to really get guys real deals and getting to the finish line, and then having the deals get busted out with situations like this. So I'm sure there'll be more that you'll be talking about and I'll be talking about in this matter. But so more to come on this one. Yeah. I guess we'll talk a little bit about something that you and I also talked about at Broker Fair, which is sales. You and I spent some time on it, and I know myself, my own personal experience with Merchant Cash Advance. I worked for 20 years on Wall Street. I considered myself a good stockbroker. I made a great living in that business. And then in 2012, I came into Merchant Cash Advance. One of my friends was working for a lender, and he said, you have to get into this business. His clients were the ISOs. My clients would be merchants. I had no training. No one showed me how to do the business. I didn't know where to buy leads. I didn't have any type of marketing set up. And I lasted about a year. And MCA is probably the one business that I got into that I wasn't successful at. And I came back years later as a lead provider, and I've been doing that since 2016. But a lot of the guys that I knew from MCA back then, or when I first got in, is the Wall Street crowd that you and I talked about. Guys that made their way out of Wall Street. They came into Merchant Cash Advance. They knew how to sell a financial product over the phone. And really, the MCA is like a reverse sale of the stock sale. And I was seeing a lot of guys come in and being really successful. What I'm seeing a lot today is a lot of guys coming in with no sales experience. I'm talking to a lot of guys now that are maybe 18, 20, 21 years old. And like you talked about when we discussed at Broker Fair, you said a lot of guys that are selling a Merchant Cash Advance, that's the first time they've ever sold anything.
That's true. I mean, it's kind of a unique product to start with. It really all depends on what type of company you start at. If you start at a company that gives you no training, it's really going to set you back for a while. It sounds like you kind of were in that situation where you left it and then came back because you were put in a situation where you didn't get proper training. Yeah, and that can really demoralize you too, because you might think that everything is a lot harder than it is, and that it doesn't work the way that you were told, but it's really just a matter of you didn't receive the proper training to be successful at the job. And so you really need to start at a company that really cares about training their individual reps. And you should really start as a rep. It's nice to start, honestly, where you're doing the very first call with the merchant, right? If you have the opportunity to be an opener, that's nice, a nice place to start, because it's the very first point of contact with the merchant, right? You know exactly what they were told or what they heard the first time it was ever talked about. Versus if you start out as a closer and you're just basically given a full package, and your job is just to say, here's the deal, take the money, type of thing. You will find yourself later on, if you're given anything other than that, you're gonna be like, this is too hard, and how come it's not working, and I don't understand it. So a lot of it is just starting at the right company. And if you don't have that, following the right people, it seems nowadays, like on social media, that may be able to supplement or complement the training you're not getting. There's a few people out there. I think we talked about one at the show, but there are a few people out there who are just kind of giving away little tips, and some of it is good.
Yeah.
Some of it is good. There's a few Instagrammers and TikTokers who are legitimately in this industry, who are sharing some knowledge. They're doing some live sales calls, or they're telling you, here's how I do things. And I watch and I say, you know what? That's actually good advice. Like, that stuff is good. And I'm glad that some people are watching that, because that's probably going to help them out and make a big difference. We didn't used to have that social media learning angle that we used to. Of course, some of it can go the opposite way. Some people are giving bad advice and you learn the wrong thing from the wrong person, but there is good advice out there. But yeah, it's an interesting situation that people at 18, 19, 20 years old, their first experience ever in sales is an MCA product. That's pretty unique.
Yeah, it's interesting. I mean, when I was at Broker Fair, we talked a little bit about Sam Kay. He gave a great presentation at the fair. I actually had a conversation with him earlier today, and he's just one of the best out there at being able to explain to young guys how to sell this product. I remember going back when I first got in the industry, a friend of mine was working at Palm. You might remember that company. And I think they were affiliated with WBL. And I was up in Boston and I was really trying to learn the business. And he said, the owner of the company said, you can come down for the day, you can sit in on the training. And there was a guy there, a former Stratton Oakmont broker, and he would give these 2-hour training classes every day. And the way that he would operate is he would look for a quality merchant, someone that could really benefit from the product. And if he felt like he could benefit from the product, he had all the rebuttals, he could handle all the objections. He would keep the guy on the phone as long as possible if he really felt that the product would work for the guy. And that's the first time I saw someone really master a sale in merchant cash advance.
Yeah. There really is a technique to it. And for those who said, "Oh, I've tried it, it's too hard," or you have to lie or something in order to get it done. That's not true at all. There really is a true technique to it. One thing I found interesting, this had to be like 10 years ago, but this industry really kind of grew up on the East Coast. A lot of the salespeople were on the East Coast. You have your New York, New Jersey crowd, your Boston crowd, your South Florida crowd. And I happened to be at a conference in San Francisco, and there was a tech company that wanted to kind of enter the MCA space, and they told me that they had done some of these sales calls with merchants, right, where they pitched the terms, and it was like a 140 or something, and they said they failed 100% of the time. That they're like, everyone we talked to, 100% of them, after we told them the terms, did not want to move forward. So we determined that the only way this is happening is because brokers must be lying to the customer. I said, no, it's not that. I said, it's honestly, you're just doing it very wrong. You've done it wrong. It's really a technique, and there's a strategy to doing it properly. And merchants do benefit from this product. It's almost as if they didn't believe in the product itself. You have to believe in the product, and communicating it and feeling and showing that confidence in the product is a big part of it.
Yeah, 14 years later, I understand that there's a certain way to sell the product now. There's a way to really explain to the guy if the money actually is going to work for him. And if you can show him that and show him how the product can work for him, I think you can make a good sale.
Yeah,
So,
you mentioned Sam Kay. Like any sales trainer out there, I'm always a little skeptical in the beginning. And I'm like, let me hear a few of your calls for real to
mhm.
see. He seems pretty genuine. He seems like he's got it down. He's telling merchants, no, I can't move forward with you. And I'm like, okay. So I think he's one of the better ones to follow would be my opinion on the matter.
Yeah, I agree. I've recommended Sam to a couple of shops that I sell leads to, and I've talked to a couple of shops and that he's worked with, and they've gotten great results working with him. Yeah, so um, let's talk a little bit about leads. I know obviously you're talking to a lot of funders, you're talking to a lot of brokers. I'm sure your network is really large in the industry, and I'm just seeing a lot of things happening in leads over the past maybe 6 to 12 months, especially in a lot of these other WhatsApp groups that are popping up, where we're seeing brokers out there selling full packages for 50 cents, a dollar, $2, selling them over and over again. I'm talking to brokers that are telling me that they're buying full packages and the dates are being changed, that these packages are being sold hundreds and hundreds of times over and over. And then I'm also hearing about brokers that are buying these full packages, trying to get as much out of them as they can, and then going out and reselling them, not just here in the US, but selling them in the Philippines, Bangladesh, India. And we know what happens when those get over there. They go to every call center in the world. They get sold back to every broker in the US. So, leads is more my expertise. That's the business end, but I know your knowledge has a large reach, and I just wanted to see what your thoughts are and what you're hearing.
Leads is sort of the age-old issue. It's where everything starts in the
Mhm,
whole industry.
mhm.
Funders need brokers to get the deals, and brokers can't get deals unless they have leads. So everything always starts at leads. Some of the behaviors you describe, I don't know that they're necessarily new behavior. You said it's become a lot more common in the last 6 to 12 months, a lot more aggression. Um, that kind of thing existed before, but I think maybe technology has just maybe accelerated the ease at which people can flip these deals around back and forth. So, I would say just be careful with any data that you handle. If you have a deal and you're like, I'm just going to sell it to my buddy, and he turns around and he sells it to China, you might get a call from the wrong place afterwards. You know what I mean? Like the government or something where you didn't even intend. So
Mhm.
I would just say be careful with how you handle data, where you get data from. Uh, and don't convince yourself like, oh, it's an unregulated market. I can just kind of do whatever I want, and just be careful with the lead business. Also, try to think out of the box when it comes to leads. If everyone is doing something, or it seems like everyone is doing this thing, you got to say, well, what can I do different to really turn this around? I think a lot of people go in with a defeatist attitude and say, "Oh, well, it's not going to work anymore because these 100 people have ruined it, and now my merchants are all ruined, all my lead sources ruined, and they're like, there's nothing I can do. We need to regulate this." That's a defeatist attitude. And a regulator is not going to come and save you in the moment, especially if you're like, hey, I need to feed my family. So you need to just be creative with what you do with the leads that you have, with the deals that you have, ways to get leads that people aren't thinking about. Things like referral networks and stuff are really, it sounds cliche, rely on referrals or ask your merchant for a referral. Ask your merchant for a referral. Send out an email. Would you refer me? Do you have any friends who own a business? You'd be surprised. A few will say, actually, yeah. Some of them might ask for a commission, but you might get a client. So you might get a client that you otherwise weren't. So it's a little bit of out of the box thinking. If you just keep doing the same thing over and over and over and over and over again, yeah, eventually you run into a situation where a million people come in and kind of ruin it. It doesn't mean the world is over. It just means that you need to be a little bit more creative about how you proceed and move forward.
Yeah, I think there's always, I'll have to be evolving. A lot of people are complaining they don't want to make calls anymore. I think a lot of people are lazy, but I think a lot of people are saying nobody's picking up. I think the carriers are blocking some calls. I think brokers need to have a more sophisticated technology, better phone systems. A lot of guys are just relying on texting. I have people calling me up saying, I need 100, 200,000 SMS leads. So a lot of people are going that direction. A lot of people are emailing. It's more difficult to get in the inbox now than it was years ago. But I know when you and I talked about BrokerFig, you said that you're talking to some of these young guys that are a lot more innovative, that some of these young guys actually have launched podcasts and they're bringing merchants in that way. Are you seeing any other way, inbound leads or anything that brokers are talking with you about that you're seeing working?
It's interesting to see how many brokers have a podcast. I was having a conversation internally here about this today. How many brokers have a podcast? And so I asked some of these brokers, like, what are you getting out of your podcast? Because it seems like you're taking time away from your actual job by talking about what you do. Are you actually benefiting from having the podcast? And several of them have told me that that's how they're getting merchants.
Mm.
Some of them use it to recruit new sales reps to work for them, but that merchants are seeing them on, their Instagram feed or their TikTok feed or something of that nature, a clip on LinkedIn or something of them talking and sounding smart. And that's how they generated an organic lead. So by having that type of following, they're generating directly new business.
Mm-hmm.
Now that's creative. Now you have to make sure that you tailor your podcast in a way that that's possible. Just having a podcast by itself won't automatically bring you merchants, but
Yeah.
if you then market your podcast in the right channels, right? Because a lot of us advertise on Facebook. There's a million ads on Facebook, but imagine if you have a clip of you in a podcast talking about funding versus just a graphic that says need 50K, call now, versus if a merchants might see 10 of the same ad in the feed, all advertising funding, and it's all going to be a graphic. And then there's going to be that one guy, and it's a clip of a podcast, like, I've been a merchant, I've been in your shoes. Here's how I got funding. That all of a sudden the merchant like wakes up, you know what I mean? And is now calling that broker just because they were in a podcast. That's one unique thing I've seen. Also, I mentioned referrals just a minute ago, and that's a serious thing. There are big broker shops, big professional broker shops, ones that have like 100 plus employees, that go around and form relationships with chambers of commerce,
Mhm.
local chambers of commerce, with local CPAs, okay, local law firms, and they say, look, we're not QuickBooks Capital, we're not Shopify Capital, but oftentimes merchants, they call their accountant or they email their lawyer or something like, hey, I need 20K. Do you know what I should do? And those turn into referrals, right? One local chamber of commerce isn't going to make your ISO shop successful. But if you have, 100, 200 local chambers of commerce, you have some sort of arrangement with them, you're going to start a pipeline of deals. Um, Legitimately, I'm not just saying like this could happen theoretically. There are a couple large broker shops where this is the primary source of how they get deals. Local chambers of commerce, CPA firms. This is what their outbound marketing is. That's who they're calling on their dialers. They're not calling and offering funding. They're calling the chambers of commerce. They're calling accounting firms. They're calling business referral networks and saying, if you have a client that says they need capital, give them to us and we'll split the commission. And that's what, and then the deals themselves are inbound, and then they don't have to compete in the way that other people do. Of course, you can supplement that with no buying leads. You can obviously you want to diversify your streams, right? So you still want to you still want to go out and buy some leads and do that stuff too, of course. But those are creative ways that brokers are trying to reach merchants in a competitive landscape.
Yeah, it's a great point. I mean, I think along with the cold calling and the texting and everything else that all the broker shops are doing, to go out there and try to find different types of ways that a lot of guys aren't doing. I had a client down in New Jersey last year, and he was buying a lot of leads from me. And he said, we're also getting a lot of deals. We've just hired this woman that was working in an accounting firm, and she's got a huge network of business owners that need working capital. And I think the first month, she brought in like $2 million in funding. So I think there's a lot of different avenues out there that brokers aren't thinking about, that they could probably 20-30% increase their funding if they broaden their horizons a little bit.
Part of the restrictions on cold calling, and it's harder to get noticed in the email inbox and texting and all that stuff. I get tons of robodials all day, and if they all say spam likely and stuff like that. But a couple times a day, I do pick up a call, and I am being offered something like a business loan. And what I noticed about it is that they name drop a company I'm already working with in some way, or they represent the company I already work with in some way. Like QuickBooks, for example. I got offered a loan from QuickBooks. They send me emails, but they also called me. And I answered this call, and I'm like, I listened to that call. And even if they weren't from QuickBooks, if they had some type of relationship with them, I probably at least listened to what they had to say. You know what I mean? Like, it catches my attention. Sometimes it's just about it's about leveraging a familiar relationship, right? Because I get text on my phone asking me if I want an MCA, and if it just says need an MCA, I might not answer it. But if it says, hey, Sean, I know you use so and so, or we talked to so and so, give it, if you need some help, give us a call. I'd be like, all of a sudden, it's a familiar name has entered the conversation, right? So maybe there's a way that brokers can drop that in to their marketing when they're sending the mass text, or if they're doing, telemarketing, to name drop something familiar to the merchant. Because if they're seeing spam likely a million times,
Yeah.
they're looking for something. Most people say, like, not most people, but some people say, I only answer calls in my contacts, right? I only answer calls in my contacts. They're looking for something familiar. So try to think about what's familiar to that merchant. Maybe you could say, maybe you don't work with their QuickBooks, but maybe the type of software that business would typically use, right? Maybe it's a restaurant that normally uses I don't know, a Toast POS or something, right? And you could somehow mention, like, hey, we're working with a lot of merchants that use Toast POS, for funding.
Great in.
We don't work with Toast or anything, but our last 10 customers we worked with had Toast.
Mhm.
And then they're like, wait, do you work with Toast? We're like, well, we don't work with Toast, but it seems like all of our customers have Toast, and you would be a good candidate to work with. So something familiar to drop into the conversation.
Yeah. I'm an MCA lead broker, and I'm getting 20-30 calls a day. MCA debt settlement, cash advance, tax, all those different things. I'll often say, I think you've got the wrong list. I think someone's selling you a bad list. I'm not a merchant. but I'm getting those all the time.
You know what I do now when I get those? I used to be like, I'd be like, do you know who you're calling? This is,
Yeah.
Sean at Bank, like how did now I'm like, hey, so I'll see you at Broker Fair in May.
Yeah. Yeah. I'll send you a link for a ticket.
Exactly. Yeah.
Uh, one of the last things I want to talk about, and again, I know you're talking to a lot of funders, you're talking to a lot of brokers, and I had some great talks at Broker Fair. And one of the best things that happened to me at Broker Fair was I was able to go to the different funders and ask them what type of deals that they're currently funding, what they like the best. So then I was able to go to my clients that buy leads and say, hey, I've talked to 5 or 6 different funders. They're looking for auto repair, medical, construction, restaurants. If you're having success in those areas, I have those types of leads. So, those seem to be the industries that funders are liking right now. Are there any other industries that you're hearing from funders or brokers that are attractive that brokers should be looking at?
Ones that are attractive, you know, over time, there used to be a lot more specializing than there is now.
Yeah.
It's over time it has evolved into we'll basically fund anything, if it does the right amount of revenue and we understand the business. I think it's more of type of business that we don't want to do is more so than what type of business are we looking for. One tough industry right now is the trucking industry. I think that like trucking has always been difficult, but what has made it even more challenging as of late is the controversy playing out with regards to the commercial driver's licenses in the country. Maybe I think there's a number of people it's speculated maybe should not have had one. Truckers who have revenue, who have a truck, who have some type of track record, but have actually fallen afoul in some other type of ways, and may have to exit the country
Mhm.
type of thing. And that's not something you normally factor into your underwriting. But with the trucking industry, it's something you're going to have to factor in because it's a real threat. There's an actual law enforcement type of look at the trucking industry, who's compliant in trucking, who's not. That's a dangerous business to be in. As far as what type of industries that people like, I mean, what do you hear? I mean, it seems they always like, oh, we'll look at any type of deal. Is there any specific thing that you hear?
Well, just what I was talking about earlier, I had some long conversations at Broker Fair with the guys at Legend, with the guys at Spartan, and they named those industries: auto repair, medical, construction, restaurants. But what they all said was brokers should be looking for merchants that have big deposits, but clean end of the month bank statements, good deposits, clean end of the month. They should be looking for guys that are looking to expand, borrow again. They should be looking for guys that are always bringing new customers in, expanding their customer base. So they said, in any industry, those are the ones that they should be looking for, but they name those specific ones as their favorites that they're getting a lot of deals with now.
So it sounds like you and I we've kind of heard the same thing, that we basically we like any good business, with the exceptions of the business types that they don't like.
Yeah.
But yet
Don't give us trucking.
trucking
Don't
has
give us
been
attorneys. Don't
attorneys.
give us litigators.
Yes, yeah, those are the hard ones for sure.
Yeah. Yeah. So, all right. I know we've talked about a lot today. We've covered a lot. Is there anything that we haven't covered that you think that the people that are on this call should hear about, something that's maybe caught your attention as of late that you want to talk about?
Maybe two things, and I should have brought up one earlier. One is that as an alternative to Texas, okay? Yeah, you asked, could this happen in other states? But let's just say Texas has impacted some folks in this business already, and they're like, what can we do to make up for the volume we lost? What some brokers and even funders are doing is that they're setting up shop in Canada,
Mhm.
funding deals in Canada legitimately. Just in the last 6 to 12 months, the amount of people talking to me about Canadian MCA has just shot up. Now, granted, I've been following the Canadian MCA industry for more than 10 years. So this isn't new to me. I've been up there tons of times. I visited funders up there, companies that are homegrown brokers, Canadian brokers. But I've also talked to, shops in the US that do business up in Canada. We even did a conference in Canada in 2019, right before COVID. So I'm well familiar with the Canadian MCA landscape up there. And what has changed is that it seemed like everyone was just talking about it more than normal the last 6 to 12 months, to the point where I did a story about it. I said, okay, guys, you got to tell me, like, what's going on? What has changed? Why do I keep hearing about it? And this wasn't part of the story, because it was one of a number of things that was sort of spoken about. But some of the funders in Canada speculated that the law in Texas caused people to think about where can they make up for the shortfall in volume. And it just so happens that the Canadian population is roughly similar to that of Texas. I think there's like a 25% difference. So Canada has a very established MCA market up there. If you're a broker in the US, it's not hard to do business with the Canadian funder. Some of them are American shops who have a Canadian affiliate, so they're already going to know who you are. It's going to be easy to transition from one to the other. There's some sort of cultural differences and stuff that you might have to work on. You might have to figure out, where do I get Canadian merchants from? And will Canadian merchants talk to an American broker, especially if you come off a little rough around the edges on the phone? But look to Canada as a real opportunity. The funders there said they're happy to work with American brokers. So that's something that everyone should be considering. And even if you're a funder, consider funding in Canada. What shocked me the most was that there are people already doing third, fourth, fifth position deals in Canada. This was unheard of a few years ago. Is now happening. In fact, one funder told me, he said he's seen a couple of deals with 10 positions. This is a Canadian merchant in Canada where it landed on the desk of a Canadian funder, and he said they got 10 MCAs.
Wow.
So that sounds like a market very similar to the US. If you're still thinking like, Canada, there's enough similarities there and enough of overlap in people and personalities that it's a real market to look into. I could always, just make a few introductions to anybody who wants it. Definitely think about Canada.
It's interesting. When I was a stockbroker, my last 9 years as a stockbroker, I did all of my business in the UK, in the office every day at 4 o'clock in the morning. And we were calling a market that wasn't being pounded. It wasn't being called by a million people. And we had tremendous success over a 9-year period by calling the UK. Now, with Canada, over the years, I've had people always asking me for Canadian leads, and we've never had access to them. Recently, on my Instagram, which I talk about MCA every day at official CJ Flaherty, I have a lot of US people and Canadian brokers coming to me and saying, I need Canadian leads. And fortunately, over the past 6 months, one of our partners that we work with and buy a lot of our leads from has had access to Canadian leads, both real-time leads that are generated by call centers and age leads, as well as just Canadian business-to-business data. And a lot of guys that I've been selling these leads to have had tremendous success. Again, they're not being called as much as the US guys. They're quality leads, they're qualified people, and people are funding a ton of deals in Canada. So I'm glad that you mentioned that today. I think it's a huge opportunity for brokers that are looking to find out, what's the next place I can go to have some success.
In the US, we say the phrase banks aren't lending, and this industry kind of helps the merchants who are not able to get financing from a bank. Well, it's even harder to get financing from a bank in Canada. There's like 5 banks total, and they're way more conservative than the American banks are. So the vast majority of merchants in Canada are just locked out of financing, period. So if you're able to offer anything at all, that's like totally unique. In fact, here in the US, we have all these layers. We have like banks, and then we have like we have like these prime lenders, and you go down the line of like lenders for people who have collateral, with 800 credit score. Then then you go down, you have all these layers to all the way to the bottom, to where the merchant with 400 credit score and no collateral that opened up yesterday can still get something. Whereas in Canada, it's like banks, then MCA. There is no like all these layers in between. So you're not really competing against anything. You're really just about saying, hey, telling the merchant that this is you can get funding. If you couldn't get it from a bank, you can get funding, and this is how it works. So I would recommend Canada. And then also we're doing a conference this October, the B2B Finance Expo, October 20th to October 21st. It is a 2-day event, and we collaborate with the Trade Association on it. So if anyone's ever thought this B2B Finance Expo in Las Vegas is a little bit different from DBank's Broker Fair in New York, the DBank Miami in Miami Beach, it's because we're working with the Trade Association on the Vegas conference. So it's not us all by ourselves. That particular conference is supposed to be a little bit more broad, commercial focused, and more attended by senior executives like CEO, CFO, CTO, sort of like, very senior people that you otherwise might not see at Broker Fair. At Broker Fair, we have a lot of salespeople on both sides, right? We have brokers, we have the biz dev reps, and they kind of work with each other. And yes, of course, you get the executives there. But at the B2B Finance Expo in Las Vegas, whom we collaborate with the SBFA, that's the trade association that we work with, you get a lot of very senior executives who often don't attend any conference whatsoever, and they come out from like the dark and they appear, and your one opportunity to mingle and network with them is at that conference. So B2B Finance Expo, October 20th to October 21st at the Cosmopolitan of Las Vegas.
Who doesn't want to go to Vegas, right?
Exactly.
Yeah, I plan on being there, so I'm looking forward to it. Any tickets for sale yet? Any early access tickets available?
You can go to b2bfinexpo.com, or you can just Google B2B Finance Expo and you'll find it. b2bfinexpo.com. You can buy a ticket on there. Brokers pay less. So there's a cheaper price just for the brokers. If you're any other type of company, like a tech company, a law firm, or whatever, those companies pay more, but we'd like to get as many brokers there and benefit them in a way. So we even take a little bit of a loss on the broker tickets, but we try to do whatever we can to make sure they have that opportunity to meet with lenders and funders that they might not get to meet with anywhere else, to get educational information that they're not going to get at any other conference, and to meet senior executives that don't really appear at any other conference, and to enjoy the experience of Vegas.
Yeah. I think I went to my first DBank conference 6-7 years ago. I'm still doing business with a lot of guys that I met at that conference. So I don't get the broker ticket. I don't get the funder ticket. I pay the more expensive one. It's worth every dollar. The contacts that I've met over the past 6 or 7 years, I've seen a huge return on. And like I said, this past broker fair in New York was invaluable to me. Not just meeting new customers and bringing new customers on board, but the information that I was able to get from talking to brokers, but talking to funders, what they like, what they're seeing, and where I'm able to go back and provide those types of products, or those types of lead products to the people that I'm working with. It was a great investment for me. So I'm looking forward to Vegas.
Yeah, and thank you for saying that about Broker Fair. It really only takes one or two relationships that form to any of these shows to be very, very profitable in the long run. Like if you just do a cost benefit analysis of the ticket price versus what you stand to make, if you even sign up one broker or one lead partner or one vendor, right? The dividends that yields over the long term, some of these relationships go on to be worth millions of dollars, right? And it all starts from that show. This is a very people-focused business. Like if you think about it, like at our show in New York, we have the high top tables, right? It's not a gigantic booth unless you're like a really premium sponsor. And that's because most companies are selling themselves, right? This isn't a hardware business where you're like, why don't you come over and see a product demonstration? Unless they're a tech company, but that's generally software. But if you're a funding company, your product is yourself, right? So it's invaluable to be able to meet with these people in person when they're basically selling themselves. They're selling their experience. They're selling themselves and saying, if you have a problem, if you need to get a deal approved, if you need an exception, if you need to call me at midnight, I'm the person you call, and that's what it's all about. So coming to these shows, even if you think you're doing pretty well in this business already, you get so much more out of being in the room with all of your peers and all of your competitors, because you get to learn what they're doing too. You get to see what they're doing right. You get to see what they're doing wrong, and you can use that either way to benefit yourself when you go back to your office.
Oftentimes I'll talk to a broker and they'll say, I was beat out from a competing broker because they had better deals. They were able to give the merchant a better offer. And guys will say to me sometimes, I just don't have good lenders. I'm not getting the right offers. I can't compete. Where do I find these guys? Broker Fair, the bank conferences. That's where they all are. You go there. you spend $1,000 for a ticket plus the travel. You meet one funder that over the course of 2, 3, 5, 10 years will fund $5 million worth of your deals. You're making 50, 100 times your money.
Yeah, you're more likely, like, look, if you're a broker and you don't, and you're smaller and you're like, look, I can only send 5 deals a month to this funder, and you're emailing them, some of them are just going to say they're just going to ignore you. There are tons of brokers who email me complaining and saying, I can't even get a hold of this funder, and it's because they're so small, right? And they're like, we never heard of you, we don't know who you are, you're probably small, don't bother us. It's amazing how that can happen, but it's the truth. You're going to have a lot different result if you show up after a table at broker fair and say, and you show yourself in person, say, hi, how are you? I've been doing this for a few years. I'm only going to start doing 5 deals a month with you, or a few deals a month with you in the beginning. I know that's not a lot. It's going to be a totally different experience. That one funder who wouldn't give you the time of day when you're emailing them about your couple of deals is gonna now remember that experience they had with you in person and be more likely to work with you and be patient in your size and in your scale in the beginning, and work with you. So definitely take advantage of that type of thing.
I agree. Just like the investments that you're making on leads, technology, cold callers, the conferences are a great investment. It's something that you should be putting in your yearly investment every year to benefit your business. So
Do I have any more time?
go ahead.
Okay.
Of course.
You were asking me, is there anything else that people should know that came up in the industry that's new? I mentioned the Canada thing, but I didn't mention what is currently on the homepage of eBanked, and that is, for the first time in the industry's history, you can participate essentially in a funder's deals by using the blockchain. Okay, most people are familiar with syndication. A lot of people syndicate. But for the first time ever, you can essentially syndicate in a funder's portfolio using the blockchain. I'm talking about Credibly. So if anyone out there is familiar with Credibly, they're basically an A-tier type lender and funder out there. They do MCAs and they do small business loans. And you can't just call them up and say, can I syndicate in your deals? It doesn't work that way. They're big enough that they're actually able to securitize their portfolio, right? And get like a credit rating on them, just like you would on like mortgage loans or mortgage bonds, right? So they're of that scale. They set up a relationship with Figure, which is known as like a fintech real estate lender, but they're really a blockchain company. And what Credibly has done is that they've essentially pledged a portion of their portfolio onto this platform, and individual investors can lend into that portfolio. So they started with a very small pot. It looks to be around, I'd say, about $5 million or so. Don't quote me on that number of loans. They just packaged up in a pool. It's on this blockchain, it's on the Figure blockchain. And any person, you, I, anybody on this call is able to essentially lend into that pool and earn a return that's backed by Credibly's loan performance on that portfolio. So it's a lot more that can be said on, in 5 minutes here. It's a whole thing, especially if you're not familiar with the blockchain. It took me a while to wrap my head around it, but in terms of what's new in this industry, I'd say being able to lend against Credibly's loan portfolio using the blockchain, that's something that has never even happened in this business at all. I think that's really unique. And also, they're not the only ones doing it. I'm working on a story right now. There's a lending company that wants to lend to MCA companies, two regular MCA companies. And then they go and they get users on the blockchain, like Bitcoin, Ethereum and stuff, to basically help fund the money they give to the MCA. And for the MCA company, they don't need to worry about the blockchain. They're just able to get a forward flow agreement or a credit facility like normal. But what's happening behind the scenes is that it's all on the blockchain. So there's a story coming about it soon. I would just say, for the first time ever, blockchain, which used to be a buzzword from 10 years ago, is AI is now the new buzzword. We've moved on from blockchain, you know what I mean? Yeah. But blockchain has all of a sudden come back, and we're seeing the first ever fusion between this particular industry and blockchain in a way that's real. Figure is a publicly traded company. They're not like some random, Bitcoin crypto scammer on the internet. This is a $1 billion publicly traded firm that has created a blockchain, and they've onboarded Credibly to participate in this. So the fact that you can lend against some companies' funding portfolio using the blockchain. We're heading into some very interesting times.
That's a huge opportunity. We've got some brokers that are on this call, or brokers in the industry that are interested in syndicating, and they want to go in, they want to do it in a safe way, and they want to do it with a really valid company, a really credible company like Credibly. There's the opportunity.
Someone named Tyler had raised their hand. I don't know if he wanted to ask a question. How do we do that?
I'm not quite sure how we do that. Well, maybe put the question in the chat.
If we're able to see his question, I know it said a hand had been raised. Let's see here. What do you guys think about AI automation systems for? I'm able to see it. What do you guys think about AI automation systems for MCA shops? So I'd say that's a broad question. I'd say that AI is being used in a lot of areas for both brokers and funders. Most of it seems to be towards scrubbing the deals and entering data into the system, really versus anything else. What do you guys think about automation, AI systems? I think AI is ultimately going to become part of the process for everyone. It hasn't really come into the play for underwriting yet, but just automating processes, I think you have to use it in some form or fashion, but you have to use it in a way that makes sense. Don't just use AI for the sake of AI. It can actually make things worse. Find something in your business. Here, what phone calls, text, and emails. So in terms of phone calls, there's one shop. I can give you the information after. There's one shop that's they train their sales reps by they talk to AI. Basically, let's say you're new at a broker shop and they put you on the phone. They give you all the worst leads because you're brand new. They gave you a training, but they give you all the crappiest leads from the beginning. And the leads suck and you suck. And so everyone comes away defeated, demoralized, and didn't turn it into anything. They never graduate you to better leads because they think you suck. But it really was the fact that you never got to work on anything good. There is a broker shop out there that is doing simulated phone calls. Basically, you're talking to an AI. The AI is playing the role of merchant in a believable way, and you're pitching the AI over the phone. I listened into one of these calls. It was not like a fake setup phone call. It was sort of like I helped kind of set up like, okay, pretend to be the merchant, So it was an AI merchant, and the AI merchant will shut you down. It sounds like a human. You can't tell the difference, right? It's AI, but you can't tell the difference. And then the AI merchant scores you afterwards, scores you on your call, things you did wrong, things you could do better, and it gives you a scorecard. And you can do this basically a million times over. And the benefit is that you didn't waste any leads, and you didn't have to. There was no merchant telling you, screw you, and creating an emotional reaction. It's just an AI, but you get a scorecard and you say, okay, it's like a game. How can I do better? And you talk to a different merchant. So AI is being used in that regard. Some companies are using it to call merchants. They're using AI to call merchants. Let's be honest, it's happening. It's an AI voice that some people are using. I think AI voices have gotten good enough already, finally. For a long time, they were not good enough. I think they're good enough now. They're good enough now that I'm not sure if I'm talking to an AI sometimes.
Yeah.
So they're definitely good enough. If you're thinking, should brokers be using AI voices? If yours is good enough, and that there are some out there that are good enough. AI for texting. Yeah, you can use AI for texting, right? Like let's say, not everybody can text back at 2 a.m. A merchant might text you at 2 a.m, and you might have an autoresponder, but you could also have a conversation with that merchant using an AI, like a regular LLM. You should take advantage of that, right? First person to respond sometimes is the winner of a deal. And if a merchant's not getting back to anybody till 2 a.m. and they did it all by text, the first person who sounds like a human that respond back is going to be the winner. I think you should use AI for texting if you can in a way that makes sense. Same for emails. I moderated a panel recently where someone told me the importance of being the first to respond. And some of your competitors are going to use AI to be first to respond, whether it's to an email, a phone call, or text. You might think you're fast, but you're not 2 a.m. fast. And sometimes that's where the deal is going to happen. It's going to be that merchant who all day long said no, and at 2 a.m. he had a change of heart and was like, all right, fine. I'm just gonna email a couple of these back, or I'm gonna text this number back and just see what happens. And by 8 a.m., 6 a.m., when you wake up and you write back 6 a.m. and you think you're first, nope. Someone who had an AI already talked it through, and that
Money's
deal is
money's
gone.
already in the merchant's bank account.
Yeah, he did. They're already debiting.
But yeah, with AI, we are working with some partners now that have a really strong AI that are generating real-time AI leads. So that's working really well. I do know the training system that you're talking about, and I've talked with the owner of that training system, and he's looking to come on and do a similar talk with us and really explain his system. So we're looking forward to that. So yeah, I think the use of AI, it's going to just continue to get bigger and bigger in merchant cash advance. I always say in MCA, like I used to think it was a lending business. I used to think it was a sales business. I just think it's a technology business now. It's if you don't have the proper tech, if you're not using AI, if you're not texting, calling, emailing, it's up to you if you want to use Ringler's voicemail. That can get a little gray area. But if you're not doing everything, you're not going to be able to compete with the guys that are.
Exactly. Somebody also asked, what sign should a new shop look for before expanding and taking on more reps? One thing I'll just say on that particular topic is that 10 years ago or so, when you would try to evaluate the success or size or prominence of a broker shop, you'd always do it by the amount of reps the company had working for you. We had 10 reps, now we had 20 reps, now we have 50 reps, now we have 100 reps, right? And you would gauge a broker's success by how many reps you had, right? So headcount was sort of the defining factor for how big, prominent, successful a broker shop was. It's not that way anymore. It's not about how many people you have there, and don't feel discouraged if you tell someone like, oh, we only have 5 people or 3 people working here, and they're like, that's it, right? I think where AI has allowed and has changed the game to say that almost less is more. How much can you do with the amount of people that you have? If you could fund $100 million and you only have 3 people, 3 reps, I mean, that sounds like success, like right there. I wouldn't care if I only had 3 reps, even if people are like, that's it, 3 reps, that sounds kind of small, right? So don't let any type of outside perception sort of paint your decision making when you're deciding whether or not to hire. Like, oh, we should hire because we'll look bigger and we'll look better. Think about how much you can milk out of the existing reps and employee headcount that you currently have. I know some that have downsized and are doing more with less. Like they trimmed out 25-30% of their workforce, and now they're doing 50% more. They found ways just to get more output with the core group of people. I think once you've completely and totally exhausted how much you can get out of humans, you know what I mean? And you've maximized the quality out of that group, then you could say, okay, we need to add more to the mix. Yeah, someone said it's not the quantity of the reps, it's the quality and how much they produce. Exactly. It's not the quantity, it's the quality. And once you've maxed out the quality of those people, then you should look for adding to your head count. People don't evaluate on head count anymore to judge an ISO. They're really looking at how much business are you actually doing? Should be how much revenue, and are you profitable, and how profitable are you? Profitability should drive everything.
Get 3 or 4 stud closers, guys that are really good in the phone. You got maybe a couple quality openers, and then you're using AI, and you really learn how to use AI. And you get a small office in Brooklyn. You don't need the big office on 40 Wall. You don't need to be paying $10,000, $20,000 a month in rent. Take that money, put it into leads, put it into more technology. You make more money sitting out in Brooklyn with the right system than you do in Wall Street.
Yeah, that's true. Right. It's also not about having the big office in Manhattan anymore. COVID basically let the world know it's okay that you don't even have to work in an office technically, right? So some of the prestige that was gained from that is not as important anymore.
Yeah, I got you. All right, fantastic call today. I'm really grateful that you joined us. Really good to see you again. Thankful for you to coming on the call. I'm looking forward to seeing you in Vegas. And anybody that's looking to attend the Vegas conference, what can you give us the website again?
B2BFinExpo.com. But I believe if you go to B2BFinanceExpo.com, the whole entire word, it will just forward to the right place. So B2B
I think,
Finance Expo, October
I think
20th to
Broker Fair,
October 21st.
I think Broker Fair sold out. So I would, if you're thinking about going to Vegas, I'd get my ticket. I'd get my travel set up right now and make sure that I'm there because I think it's going to be a great show.
You can still get a discount on a room. We do have a special room rate on the website, a discounted room at the Cosmopolitan. It's one of the nicer hotels on the
Yeah.
strip.
Yeah. Early bird special on the ticket, discounted room, an opportunity to go there, make some connections and make a lot of money.
Yep, and there's a link to it on Daily Funder. There should be a banner if you go to Daily Funder on the website. Just click it; it'll take you right to where you need to go.
All right. All right. Thank you again, Sean.
Thank you, CJ. Shout out to you and to Loyola Media Group, to your WhatsApp group, and to all your followers there. Always a pleasure seeing you at our events and working with you.
Same here, Sean. Thank you.
All right, thank you, everybody.
All right. Bye-bye.